Hello, bienvenidos, and welcome to the Congressional Hispanic Caucus Institute's conference session on the role of the financial services sector in philanthropy and investment. My name is Nina Cavazos, and I'm the Corporate Relations Manager at CHCI. On behalf of CHCI, I would like to thank the American Bankers Association, Prudential, S&P Global, and Mastercard for their generous support of this session. Before we begin our panel, it is my distinct privilege to introduce our panel host, Congresswoman Sylvia Garcia, and our moderator, Ray Suarez. Representative Sylvia Garcia was elected to the U.S. House of Representatives in November 2018, becoming the first Latina ever to represent the Texas 29th Congressional District. Sylvia is a native of Palito Blanco, a South Texas farming community. The 8th of 10 children, Congresswoman Garcia saw her parents struggle to raise her and her siblings. They taught her that with hard work and a good education, she could accomplish anything. With these lessons, Congresswoman Garcia dedicated herself to success at school. And later, as a social worker and legal aid lawyer, she worked to protect her community's most vulnerable, old and young, and ensured that no one was forgotten. In this session, leaders in financial services and policy will discuss how the sector's philanthropic programs are investing in the future of American communities. To help us moderate our discussion, we're delighted to have National Association of Hispanic Journalists Hall of Fame inductee, Ray Suarez, the co-host of World Affairs, produced by the World Affairs Council and distributed by KQED-FM. From 2013 to 2016, he was the host of Al Jazeera America's daily news program, Inside Story. The program covered a wide array of national and international news stories. Suarez spent 14 years as a correspondent and anchor at public television's nightly newscast, the PBS NewsHour, where he rose to become chief national correspondent. During his years at the NewsHour, Suarez covered the 9/11 attacks on New York and Washington, reported from the floor of 7-party political conventions, moderated 2 presidential primary candidate debates, and more. Welcome, and I hope you enjoy the session. Don't forget to continue the conversation with us on social media at #CHCIHHM20. But before we hear from Congresswoman Garcia and Ray, a word from our sponsor.
Hello to all conference attendees. I am very honored to welcome you to this panel, which is entitled The Role of Financial Services Sector in Philanthropy and Investment. My name is Rodrigo Alba, and I am Senior Vice President and Senior Counsel at the American Bankers Association. We represent a broad swath of the banking industry, ranging from the very small community banking institutions to the very large banks that serve and support the financial needs of our big nation. As importantly, however, I come here as a former CHCI fellow myself from the Clinton era, I will clarify. And I am extremely excited to be part of the CHCI's leadership formation through this event. Before anything else, I want to congratulate this year's fellows, and we'll look forward to meeting all of you in good time. This will be an amazing journey for you, regardless of the exceptional pandemic situation we are traversing. As a matter of fact, the pandemic itself is bringing forth some very interesting policy questions that we hope that we can resolve, perhaps with your help. So the American bankers are pleased to be part of and to be a CHCI partner and assist in supporting their role as a bridge and virtual link that brings together thought leaders in financial services. And let's recognize that CHCI has always been rather unique in doing this and doing it well. That is, assembling all the voices in the policy segments, regardless of what color the political team jersey may be. Our job on this panel is to discuss how the financial services sector has built philanthropic programs and how it is investing in the American people during these trying and exceptional times. So let's move into today's subject matter. We are here to fully immerse into this topic of philanthropy, and let's start that right now. I look forward to this next hour of discussions.
Hi, this is Houston Congresswoman Sylvia Garcia. I know this is not how we expected participating in the CHCI conference and gala this year, but I'm glad we can still be together virtually. One of the most exciting things I've been able to work on since I came to Congress is on the Diversity and Inclusion Subcommittee of Financial Services. Chairwoman Waters and Representative Beatty created this subcommittee because they understand that until our communities are given full and equitable access to all parts of our financial system, minority businesses still have a harder time accessing affordable capital than their white counterparts. Without that access, it's impossible to grow businesses that support and reinvest in our communities. When I was the Houston City Controller, I often went to bond sales and worked with financial firms. It was rare for there to ever be another woman or minority in the room. Some of that has changed, but not nearly enough. We know that minority money managers who have as good or better records than their white counterparts are not given an opportunity to manage investments, or if they're hired, they are not given nearly the amount of funds to invest and grow. We know that this is a sector where large investors will say they only look at the numbers, not the race or gender of their managers, but the data simply doesn't back that up. Why is this important? We know that when Latinos and other minorities have access to the generational wealth that has been historically reserved for others, it is invested and philanthropically given back into our communities to uplift the next generation. We need to create that virtuous cycle of giving by ensuring that our community is able to access the resources and wealth that can then be reinvested in our communities.
Hi, I'm Ray Suarez. It's great to be with you all. Normally we'd be in a convention center or a hotel ballroom. Maybe the large group of attendees would be waiting for lunch and we'd be the only thing standing between them and lunch. We're meeting in this unusual way because of the challenging times, and that makes a lot of our topic today. We have an excellent panel of conferees, of panelists. I'd like to further introduce you to them now. Let's begin with Shanae Harris.
Hello, everyone. My name is Shanae Harris, and I'm Vice President of Inclusive Solutions at Prudential Financial and also President of the Prudential Foundation. So I'm really happy to be with all of you today.
Next is Carolyn Cavicchio. Carolyn?
Good morning. I'm Carolyn Cavicchio. I'm Director of Corporate Responsibility at S&P Global, and I'm Vice President of the S&P Global Foundation, speaking to you from Denver, Colorado.
And Sandy.
Hello, everyone. Sandy Fernandez. I'm with the Mastercards Center for Inclusive Growth. I am our program director for our programs in the U.S. and Canada, and I am joining this panel from New York City.
Sandy, let me start with you. What's been the short and long-term financial impact of the global pandemic on Latino communities in the U.S.? And how does that compare with other racial, ethnic minority groups?
Sure. Let me provide a little bit of context as well in terms of where I sit here at MasterCard. So I'm at the Center for Inclusive Growth, which is the philanthropic arm of the company. And before I actually joined here, I was at both Citi and JP Morgan, where I led work related to community and economic development. In the center itself, its strategies underpinned by what the company calls doing well by doing good. And we really focus on what we do best. So leveraging our technology, our networks to connect people to the modern economy. We really believe that leads to long-term strategic growth for the business, but also we want more people to transact and use our network. So believe that growth is connected to that as well. A key part of that is an issue related to exclusion. We want to be able to address that. Because if you continue to exclude people from the financial systems, particularly mainstream financial systems, it just leads to greater economic inequality and lack of economic mobility. And accessing mainstream financial services also enables the poor and the folks who are underserved actually access services at a much more affordable cost. It's very expensive to be poor. So for us, inclusive growth is about connecting people to the networks that power that modern economy. It's networks that all of us use every day. Things like physical networks like highways and subways, social networks who we know, knowledge and educational networks, but also utility networks, internet and electric networks as well, water. You can go on and on about these. And a lot of our strategy and the work that we've developed over the last couple of years, particularly our 4 focus areas, which I'll talk a little bit more about, was informed by conversations with a number of people, but also with folks like Shanae and Carolyn at Prudential and at Standard & Poor's that really informed their work related to financial security in workers. When we talk about financial security here, where the big focus for us on access to credit, particularly through community development financial institutions. We also very much focused on place. So in the economic development pillar, we've developed tools that help to identify trends, to help revitalize economically distressed communities, and also workers. How do we help workers actually navigate this changing economy? And then lastly, data for good, which is about unlocking data to help reduce information inequality, particularly in the nonprofit sector, so they have parity with the private sector and help inform decision making. Getting back to your question around what's been the impact on Latino communities in the U.S., I think, writ large, both for Latino communities and also for Black communities and many communities of color, the impact of COVID has been significant in that a number of our people also work in jobs that are low-wage jobs. So they're the frontline workers. They're more likely to get sick. The impact of COVID and the access to healthcare is also significant. So significant impact on them, but also on their ability to actually access new job opportunities as well. So we really feel that COVID has accelerated the need for work, particularly around the future of work and what are those new pathways that folks can actually access to access the digital economy and gain additional employment and gain actually greater economic mobility. So for us, at the end of the day, it's about how can we put people at the center of the economic discussion, particularly communities of color, to enable them to navigate the digital economy, connecting to the benefits that they need as well, and also work very closely with folks who are experts in the field as well, like folks like the Urban Institute, Aspen, and members of Congress. We can really drive financial security for them and develop the right products, services, but also pathways to new jobs for them.
Shanae, when we talk about communities of color, communities with high concentrations of middle and low wage workers, was the failure of Congress to pass a second round of relief the kind of thing that, a lot of people might look on and say, gee, that's inconvenient. But are we talking about people who were living so close to the edge that it was something more than simply inconvenient?
Yes, absolutely. And I think, the prevailing challenge for communities of color that tend to experience a tremendous amount of systemic barriers against them, right, and lack opportunity, is that I think you have found over this administration the shrinking of safety nets that really help folks get through crises. So I think that, that's the reality that we're living in right now. Hopefully that will change. And because of that, I think increasingly there has been a reliance on other sectors, on the independent sector and philanthropy and the private sector to help reknit those safety nets and to consistently provide investments that create solutions that allow people to stabilize and also to hopefully recover from this current crisis. So yes, that's an acute challenge. And I think that, right now we're not finding a lot of answers from the public sector. And I think it will require a cross-sector approach of multiple stakeholders really coming up with solutions and taking the long view to support those.
Carolyn Cavicchio, when we talk about an uncertain future for the kind of families that Shanae was mentioning, that Sandy was mentioning, why is that so? Is this not a situation where once we're sort of past this, we can just pick up and go back to business as usual? Are there setbacks that are more enduring than the pandemic itself?
I think so. As much as we would all like to think that things are going to go back to normal, we also have to remember that normal wasn't so great for many Americans. When we look at the Latinx community in May, we saw that 1 out of 5 Latinx households had at least one of its members who had lost their job in the last 2 months. that's not going to be something that will bounce back from immediately. In June, unemployment remained significantly higher for Latinx workers than for white workers, 14.5% versus 10.1%. And if we look at the industries that have been most severely affected by the pandemic, leisure and hospitality, retail, other services, we know that they were affected by shutdowns significantly, but they're also the industries where significant numbers of Latinx workers are employed. So those aren't things that we are going to see come back quickly, if at all. I think the other factor is this move to digital workforce. We are all sitting in homes around the country right now, being able to participate in this conference. And we're probably all doing our jobs from home. I've been working from home for 6 months and will probably be doing so for another 6 months. And other than the fact that I'm sitting at my dining room table right now, my day-to-day job hasn't changed very much. But for people who don't have that ability to work from home, or if their jobs could work from home, they don't have a computer at home, or there's one computer and every member of the household is sharing it for schooling and work and communication, or perhaps they don't have stable internet. As we see these shifts in work that I think are going to become permanent for many industries, we know that lower income communities of color, Black and brown people are going to be left out. And so we all have to really be conscious of that and make some changes in the way we develop our workforce development programs, our talent acquisition programs, and indeed our philanthropy. And we've made some of those changes at S&P Global right now and are exploring more and more of that.
Shanae, how does the philanthropic sector, what's its role now, especially coming from the financial services industry, their philanthropic arm? It's not just a question of giving people money because they don't have any money. Isn't it more complicated than that? A set of solutions, a set of techniques, a set of approaches that can help them weather this storm, navigate some of the things that we've been talking about so far.
Absolutely. I think that the role of financial services, the financial service sector, and particularly their philanthropic arms and investment arms, are critical during this time. And, that comes from two fronts. One, as I said earlier, as we see some of the challenges that, are occurring right now in government, public sector, to appropriately respond to these challenges, I think increasingly there's going to be a lens towards looking for other sectors to step up. And society is increasingly demanding more of the private sector. And there's an expectation that brands should help to solve complex social challenges, particularly the issue of economic inequity. And I also want to be candid that many would argue that the financial services sector historically have helped to create these issues of inequity. So I think given that, there's even more of an issue for, the financial sector to provide leadership in this time of crisis. I think it's important to reinforce what was said earlier, that the pandemic just simply magnified existing equities for Black and brown communities. And I think one of the things that the financial sector and the philanthropic sector can do is to help to tackle the root causes of these challenges, which were often focused on systemic racism. So at Prudential, we've had a long history of addressing issues of racial equity and really investing holistically in Black and Latinx communities. We take a place-based approach in our work and work deeply in communities of color, and currently invest over $106 billion in grants and contributions, really supporting strategies focused on social justice, advocacy and policy efforts, but also, strategies that help unlock, the challenges of systemic barriers, whether it's increasing access to high quality education or workforce training, financial products, and really looking at tools and services that would be relevant for the needs of minority communities, and ultimately to help minority-led businesses and build assets and continue to grow economically. And I think, that's important to do from a philanthropic sense, from a moral imperative, but there's also a fundamental business case for companies to ensure that we unlock opportunities for diverse communities. That kind of extends, I think, beyond the traditional philanthropy, that, we really need to look at the private sector as making the case to invest in diverse segments that are going to be our future consumer base increasingly, and is our current consumer base. Latino Americans are the fastest growing demographic in this country, and I think because of that, you'll see more and more of the intention to focus on making sure that we're establishing partnerships that create economic opportunity for diverse consumers and diverse populations, and investing in strategies that take the long view of, dealing with these challenges, rather than this being a short-term, in the moment approach, because it's going to take a much longer process to reach the goals that we're looking to accomplish.
Sandy Fernandez, how have you used data for social good to inform your efforts to improve economic mobility for millions living in low-income communities, future workers, low-wage workers?
Sure. So at the center, data has always been a key part of the work that we do here. It can share a couple of examples around that as well. The idea behind Data for Good is really about how can you build the capacity of nonprofits and also government as well to analyze and use the data that they do have, because as we know, nonprofits work directly in community. They have access to information, both ad hoc information and also hard data information about their clients and the places that they live. So if you're actually able to build up their technical capacity, their expertise in the space, provide the right tools, you're going to be driving greater growth and greater opportunity for them to both drive their mission, but also to help support their constituents at the same time. And also build an evidence base around the types of interventions that they've been able to do. I'll share a couple of examples. We've developed a tool called the Inclusive Growth Score. It's a free online tool that's designed to attract investment in development to underserved communities and struggling cities. But rather than focusing on incentivizing profit, it's really focused on incentivizing inclusive growth. So the score itself tracks a number of socioeconomic measures. It includes things like the number of new women and minority-owned businesses, consumer spending power, access to the internet, what are the available parks and the green space in there. So it looks at three areas: people, place, and the economy. The idea is to be able to use this information to have a snapshot in time of what it put down to the census tract level of what that community looks like. Use that information to inform investment, drive investors to really understand the unmet spending power in that community, and help deliver and build community services and facilities and stores and shops that people actually need, and also help create jobs. So for example, in Erie, Pennsylvania, the tool was used to help investors identify opportunity there. This is a market that's usually overlooked because it's very small. They lack the data. They lack the potential to really gauge what's actually happening on the particular community from an economic level. The tool helped to bring grocery stores, food hall, and culinary arts programs to what was previously a food desert. The idea is that we'd be able to replicate this more and more with other cities, with other places, and with community organizations and governments over time. So you can create jobs and create greater opportunity there. Another example of this work is that we're actively working with the Brookings Workforce of the Future initiative. We're using data to help city leaders understand where and how many vulnerable jobs are concentrated in their city or their state. And the initiative is applying network science to really understand the city's unique capabilities, including their infrastructure, talent, institutions, to identify where are the places that the city should invest in to actually create good quality paying jobs that folks can actually move into and that have long-term growth and opportunity as other jobs start to die off. So those are two examples around data, but we have a number of other examples and ways that we've used data to inform and look at the impact of, for example, infrastructure in the city and see how that impacts merchants as well to make the case that shared Wi-Fi infrastructure, shared bike stations actually have a net positive impact on community and on spending power in places as well. So I can go on and on about this, but data is critical to help drive growth, but also to drive employment opportunity as well. And it's also about the native data power of low-income communities, which is significant, and the spending power is also significant as well.
It's interesting that you bring up spending power in these communities, because as a reporter, I spent the 80s and 90s sort of at ground zero in urban America, watching financial institutions flee from these neighborhoods and leaving behind an array of less than ideal financial institutions, check cashing places, payday lenders, hot money, hot loan places like the Money Store. There were no banks anymore. There were no S&Ls. There were no brick and mortar banks. Has the revolution brought on by the ubiquity of this thing, the cell phone, in effect leapfrogged that physical abandonment so that you've got a bank in your pocket any time of the day or night? Carolyn?
We certainly saw that happen in the developing world, where we talked about unbanked communities, and there was a huge push to try and get banking institutions to open brick and mortar locations. And then suddenly, the ability to have the cell phone banking suddenly meant, that we didn't need to do that. And many of the traditional players in banking or money transfer, for example, were suddenly left out by the development of new technologies. So I definitely think that that's a factor. I think that the downside of that is the employment piece, because I'm not a banker, and so perhaps others can speak to this better than I. But banks are often a place that hire people who don't have college degrees and are able to give people a foothold into professional employment. So I do think that there is a downside to the lack of brick and mortar that we have to acknowledge, even while banking really puts that right into the hands of consumers by able to bank from phone.
But Shanae Harris, even with that technological revolution, is there still a sense in which these neighborhoods are underbanked, underserved? Or are those gaps narrowing because you don't need to go to a check cashing place? You can just take a picture of your paycheck and have it deposited right to your account.
So I would say that things are narrowing, and I think, the potential of the fintech industry, this idea of using technology to increase access has great potential. But in order to realize it, there has to be a lens of inclusion incorporated into that. There needs to be more education and an opportunity to influence, right, how business lines are able to capitalize off of these technology platforms to create responsible products and services that expand access. And there's an interesting role that philanthropy can play in supporting this, because there's a gap a lot of times between market solutions that already exist that appropriately meet the needs of diverse communities. And a lot of our work at Prudential has been in the philanthropic space, trying to set the stage of brokering unique partnerships that help create those solutions, and to provide insights from other sectors, the independent sector, from the public sector, to influence how our business leaders are thinking about this problem. So, for example, on an annual basis, we usually do a convening that brings many of our nonprofit leaders and that have thought leadership and expertise in these challenges to a full-day conference with our business leaders, right? Folks who are driving product solutions and innovation. Many of them are leading business lines in Prudential. And we create an environment that just allows for authentic dialogue on what are the challenges, what are the different perspectives in terms of solutions, and how do we jointly think about, the role that we can collectively play in supporting that. And if there are opportunities to provide early stage capital to think about these ideas differently or to provide insights, that's the role that we see, ourselves playing within Prudential is really supporting those inclusive solutions by setting the table and bringing diverse folks together. And, a lot of it starts with just empathy and a shared understanding of really what truly are the challenges. I will tell you that in one of these conferences that we did, we're headquartered in Newark, New Jersey, which is a majority minority community. So we really have a true laboratory to test out these ideas. And we did a simulation with many of our senior leaders where we paired them in groups and had them go out into the community in the city of Newark and have them try to do a number of financial transactions, understanding intimately what does it mean to be a part of the alternative financial services community, whether it's, trying to do a wire transfer, not from a traditional bank, or, how do everyday people negotiate in an environment when they don't have access to mainstream financial services. And I think that exercise, just being on the ground in community and neighborhood, provided insights that, accelerated conversations about how we collectively come to solutions.
Yeah,
Sandy,
if I can just add to that.
go ahead.
If I can just add to Sinead's comment, I agree with everything she just said. I also think that when it comes to enabling access to financial services, and also to answer your question, the FDIC publishes a study, I think it's every 2 years, and they look at the percentage of and underbanked people in the U.S., and that's actually gone down since their last study. So it does seem to be on a decline. But to build on what Sinead was saying as well, I think, meeting people where they are, there's some really good examples of that type of work where you look at providing financial services through a lens of cultural competency. And a really good one for this is an organization called Grameen America. They're a nonprofit community development financial institution. They deliver capital to low-income women. And they actually base their underwriting and their loan decisioning based on a social capital model. So the women come together in groups of 10 or so, and they vouch for each other. So they will vouch for Sinead, they'll vouch for Carolyn, saying they have really good businesses, they're going to actually pay back. And that social capital model actually carries so much weight. They have like over 99% repayment rate, very little default, obviously less than 1%. But that's an excellent example of one way that you can actually help deliver financial services through an innovative lens that actually meets people with something that they're very familiar with, but also integrates them into the mainstream financial society. These women also develop a financial identity because they get reported to the credit bureau. They open a bank account because now they have an actual credit score that's a great credit score that they can use to access mainstream credit. And they can also use that to help continue to grow their business over time and access additional loans and help support their families and lead to that long-term economic mobility and opportunity that they seek both for themselves and their community. And there are a couple others out there. I'll just mention a couple other organizations. Mission Asset Fund is another great one. Uses a slightly similar model. They focus on men and women, and they've actually franchised and licensed the model so that they can deploy it in LGBT centers, in Black-led centers, a number of different institutions where they can use social capital to actually help deploy credit and also build someone's financial identity. And then you have others who are in the private sector who are doing really interesting things. And I think the other key point of this is also investing in those businesses and in those financial services companies that are led by Latinx people and they're led by Black people who really have a solid understanding of what the community needs and what they want. And they will be able to deliver credit, financial services, savings, checking products, et cetera, that people really need, want, and will be using over the long term.
Yeah, if
Are
I
there
could add
efforts
on to that.
underway? Oh, go ahead, Carolyn.
I was going to say there are other groups. Those are great examples, Sandy. Axion Opportunity Fund is another organization here in the United States, part of the global Axion network, that is making microloans to primarily communities of color. We support their lending to women, and they've had tremendous success rates. Kiva is another group. And then there's a network of women's business centers all around the US in all 50 states that are making small loans as well and supporting entrepreneurs and women in developing their businesses and giving them access to capital that they don't have traditionally. So I do think that we have seen a network of organizations in the nonprofit sector that have sprung up to it that concern you for about loss of traditional banking institutions in a lot of communities of color.
Are there efforts currently underway to raise the level of home ownership in racial and ethnic minority communities? The 08-09 recession was a disaster for hundreds of thousands of these families because they got into housing late, so they bought high, and then many of them lost their homes when the primary breadwinner lost their job, when there was a sudden plunge in the value of the family home. Those balance sheets, those family balance sheets, took a decade to repair. And now the home ownership level in those communities is lower than it was before 2008 in many cases, not in all. Are there any systematic addressing of these problems that arose during that last terrible Great Recession, and a version of which we might see roll out now with people losing secure housing through COVID?
So I'll start by just sharing that I think, there are strategies happening. I think what we've learned from the foreclosure crisis that occurred during the recession was the need to provide a more holistic approach to supporting families with counseling, financial counseling, and helping to ensure that they were informed of the choices and the strategies that they can deploy throughout the continuum, not just in buying the home, but also how do you, address the trade-offs, when you're dealing with financial strain of how to even keep and protect your assets during times of crisis. We created an interesting partnership with Unidos US, which has been in the work of providing financial counseling through their affiliate organizations, really focused and targeted on home ownership, but linking them to the financial clinic and a new fintech tool that they have developed that allowed them to really expand those services and provide a little more holistic approach to financial counseling that, started with maybe a goal of home ownership, but was a lot more comprehensive. So I think that, by, linking best practice models with folks that have credibility on the ground and expanding kind of the idea of financial coaching or financial counseling and support to nonprofits that are meeting people, in places where they trust the organization, but that can be an entry point to really addressing these issues. Helps to, I think, address the challenge of home ownership, which is an important tool to build assets within diverse communities, but hopefully will help bolster, I think, fragile communities in, getting through this challenge in this crisis right now.
Mm-hmm. Yeah, that's a great point that you raise, Ray. And one of the things we talk about, building on what Shanae just said, is to look at an asset building approach. S&P Global Foundation supports a nonprofit partner called Closing the Women's Wealth Gap Initiative. And we spend a lot of time looking at wage gaps and the difference in wages for women and communities of color. but we don't necessarily look at the broader issue of wealth or asset building. And home ownership is an important part of that, beyond what you're able to build, that appreciation that people have in values of home that then supports them in retirement or allows them to then move into better neighborhood, better school districts, all of the other things that I think white communities take for granted that we see communities of color really suffering from the lack of. So ensuring that people have access to homeownership, keep their homes, and that broader wealth building strategy is something that I think we definitely need to continue to work on.
Well, how might
I would just
corporate...
add to that.
Oh, go ahead, Sandy.
Yeah, I would just add to that as well. We don't, in Mastercard, we're a payments technology company, so we don't offer any direct financial products to individuals. But so I won't necessarily speak to systemic issues related to housing, but I think a key piece around, particularly for vulnerable populations, around maintaining home ownership is around resiliency of that individual and of the family. And connecting back to asset building, to Carolyn's point, I think savings is a key piece of this as well. So enabling and incentivizing individuals and families to actually grow savings over time, whether it's connected to demonstrations that show connecting it to prizes actually increases savings behavior, looking at workplace savings options, or there are a variety of different behavioral tools and methods to actually increase savings. And low-income people can save a little bit of money, and it's possible. That will serve as a cushion in case there's a potential emergency. So also, I think innovations around savings are a significant opportunity to scale those up. And there are a number of organizations and also private sector companies who are testing and also deploying savings tools for folks as well.
We're getting some great questions in from our viewers around the country. Nina asks, how can we increase Latino representation in the financial sector and empower Latino leaders to create tools that benefit the community?
I think one of the ways we do that is through very deliberate hiring practices in our companies. We have a partnership with a nonprofit called Year Up, which works with low-income youth from communities of color, and gives them 6-month internships within companies, many of which are in the financial services sector. And once students are exposed to the companies are exposed to the students, they become part of your employment pipeline. So I think those kinds of mentorship, internship programs are definitely one of the ways that we as companies can address that need.
And I would just add that I think it's important for companies to have a coordinated approach and really bring resources together that may help support diverse talent pipelines. So philanthropy could be really effective in looking at early stage investments that, for example, for math and technology careers are, that could translate into critical roles, in the insurance industry, whether it's actuarial science, et cetera. How do we invest earlier to ensure that young people have exposure to those careers, that there are opportunities to continue to build and cultivate skills that then link to some of the talent acquisition investments that may be made in HR that link, diverse populations to internships. So in many ways, these efforts tend to be fragmented within a company, and I think one way is to just ensure that we're looking at a continuum of resources in a coordinated manner, so that you have these diverse talent pipelines that are coming into the company and allowing diverse candidates to grow their careers in the private sector.
Sandy, how did you get involved in the first place?
Oh, for me, I was, lucky enough that when I came to New York, I had a friend who worked in financial services, and I was looking for a job. I had just left another job, and I was probably out of work for about 6 months. It's probably about like 15 years ago. So I came into City, and I was there, and I was there on contract, and actually was really interested in what they were doing as related to community investment, and that's how I bit sort of the bullet on the community investment side. Before this, I was in community health. And from then I went to graduate school, and I went to NYU, and I got my master's degree, and continued my career both here at Citi for about 10 years, and I went to JP Morgan, and then Mastercard the last 4 years. But it was having a friend who knew I needed a job at the time, and me not knowing that I had really had a passion for community and economic development work. That's how I got connected. But that story about networks, I was lucky enough to have that connection. But the story about networks is critical, and so connecting to more people. I think being open to talking to a variety of different people is critically important. Something that also needs to be taught both in college and in high school, and in places where people are being groomed and also accessing skills around workforce development. Because the network piece, it can't be overstated how important that is for jobs, and that should be a key part of training as well.
Yarisa asks, how can we promote digital literacy and identity theft protection awareness within our Latino communities? That's the cutting edge of new crime on there. I mean, it's not like waiting to mug somebody outside an ATM. Here, you don't even see your victim.
Yeah, so there are a number of different resources that are available. Our company, Mastercard, has something called Master Your Card. It's a curriculum. It's available online, Master Your Card. I'll get the correct URL and I'll share it with you. But it'll have information on how to protect your identity, how to securely transact online as well, and what are the steps you could take in case your identity is compromised online too. So there are resources. I would point you to the Mastercard resource as one, and then there's several others online that folks can actually access.
Because it's an area where not only are family losses considerable, but the institutional losses are considerable too, aren't they?
Oh, significant. Yeah, cybercrime and identity theft can have significant impact on someone and also derail your credit building opportunity as well. So significant, and there are a number of protections that some cards have put into place. For example, MasterCard has a number of protections on their cards that enable people to help recover the identity if it is stolen and compromised. And again, there are a number of educational tools that people can leverage as well.
Do you think there will be things institutions learn during this COVID crisis and really, strikes in downtowns, major fires in the West? There's a lot going on that have people out of their homes, out of their jobs, not in their normal day-to-day lives. Will there be lessons learned during this calamitous year of 2020 that will serve financial institutions in good stead the next time there's another crisis?
I hope so.
I think so. Go ahead, Shanae.
I think that, very often financial services, corporate brands look at philanthropy as kind of a separate arm. It's great that we're, giving to community, and that's a wonderful thing to do. I think if anything has taught us about what we are learning in 2020 is that issues of inequity, right, go beyond just kind of the community benefit and the moral imperative and the need to have a halo effect. That, inequity is a risk, right, to your business strategy. If we can't maintain a stable society, if we can't ensure that we're investing in these complex social solutions, we're not really creating an environment where brands are going to be able to do business and thrive. So transferring it from a nice to do, from a philanthropic standpoint, to really investing in strategies that reduce business risk and really seeing inequity as a core risk to your business strategy is hopefully something that we'll learn through this process.
especially as members
I
of these
think that
communities
investment
become a
piece.
larger share of the overall United States population. If we're
Mhm.
looking at 2045 and a majority of Americans who trace their ancestry to Africa, Asia, and Latin America, if you're sitting in a C-suite today and you're not thinking about 2030 and 2040, shame on you. Carolyn, I'm sorry, I cut you off.
No, I think that's an excellent point. And I think, as Sinead describes this as investment, and Sandy made good points about all the ways MasterCard looks at this, from a business perspective, we can't simply say we're going to make some racial justice grants and then we're done. We have to look at these as partnerships. S&P Global Foundation did $1 million in racial justice grants. And one of the points that I discussed with our board of directors is we've now increased our annual giving budget by $1 million because these aren't one-offs that we're doing. We now have developed what will be long-term partnerships with 5 organizations like the ACLU and the Lawyers Committee for Civil Rights under law. And so we have to think about how we change our strategies, how we pivot, and then evolve in our corporate responsibility and giving programs.
Let me go from right to left and get final comments from all of you before we go. Sandy, Shanae, Carolyn. Sandy?
Sure. In terms of final comments, I'll just build on your last question. I think we're seeing a significant change across different corporations and also folks who hadn't participated or delivered their own capital into communities of color. You've seen organizations like Netflix contribute over $100 million into Black-owned banks and communities. I really hope that's going to be a sea change, but that type of investment is also balance sheet capital, which is really significant because it's something that they can actually continue to invest time over time. And I think you will be seeing more of that. You will be seeing that more from us as well, from Mastercard, in terms of ways that we're committed to Black and also Latinx communities. And we'll be making an announcement later this week where we'll be talking about some interesting investments in some of our work that looks at both people, that looks at the markets, and also looks at society as well. So stay tuned.
Shanae?
Yes, I would just add that I think, just building off of the conversation about the lessons learned for 2020, I think, we all have to have a much more coordinated approach to addressing these complex social issues that take the long view, that provide solutions beyond philanthropy. We have to leverage the full capabilities of our companies, I think, to really come up with these solutions. And also to make sure that we're engaging a broader set of stakeholders and thought leaders on how to create those solutions. We need to talk to people who are on the ground directly supporting communities of color to let us know what works. So those are things that I think are important to reinforce as we move forward.
And Carolyn?
I think we also have to look at where the jobs are and are going to be. And in the digital technology space, there are thousands of jobs going unfilled every year. And so for us, partnering with organizations like Chicas en Tecnología or Laboratoria or Tecaria, which are training women and folks from the Latinx community, to get those digital jobs, to work with the Mikasa Resource Center here in Denver, which is really addressing digital equity and employment. We have to make sure that people from the Latinx community are trained and then have access to well-paying jobs and the jobs of the future.
A moderator has 2 jobs, really. One is to run a good conversation, which this panel made that easy. The other is to get off on time. Sandy Fernandez, Carolyn Cavicchio, and Shanae Harris, I did it. We're done. And I want to take this opportunity to thank all of you, but also to talk about how essential it is that all the stakeholders in this sector hold up their end of the deal. The old paternalism of the bank on Main Street with a guy with a pinstripe suit and graying temples sitting behind a great big mahogany desk inside. Those days are done. Banking is limber and challenging and high-tech and exciting. It has a great deal of bearing on family trajectories here in the United States and whether a family can get over. All different sides need to do their part to remain wide awake, eyes open, smart consumers, smart shoppers, and smart transactors. And the banking sector needs to realize that they are dealing not with a group of children waiting for their gentle administration, but for a group of people who are needed by them as much as they're needed in return. Great to hear all of you, and I hope we're through with this national crisis soon. We've got a lot of work to do, even in the best of times. Thanks a lot.
Thank you.
Thank you.
Thank you.